Hello everyone, thanks for joining us today for our webinar. It's going to be on the end of tax year, so coming up to the end of the 18-19 tax year now, so we want to make sure that there's any actions that we need to take. We've got those in place before the end of the year and also some changes for the coming 19-20 tax year. So let's get started. So my name's Ben, I'm the sales manager here at Crunch, so I'm responsible for onboarding all of our new clients. But I've got with me Michael Awuye. He's our technical senior accountant, one of our most senior accountants here.
Thanks, Ben.
So Michael's going to be giving you all the information and know-how. He's one of the brains of the operation here at Crunch. So you're speaking to the source. So what we're going to be doing today is, like I said, end of tax year tips. Now, at any point, feel free to send us any questions. Myself and Michael will do our best to answer those for you at the end of the webinar. So get them in at any point. You don't have to wait until the end to answer your question. Just get them straight away and we can see them all and we'll do our best to answer them all in the webinar. If we don't get to any of them, we'll follow up via email too. So get those questions in. We're also going to have a list of comprehensive follow-up reading that you can take away and have a look at in your own time as well. So I know that a lot of our clients are on the webinar today, so I think a lot of you already know what we do, but for those of you that aren't familiar with Crunch, we're an accountancy practice, but we also do self-employed mortgages, business insurance, we assist with investments and pension advice as well. And everyone that is a client of Crunch will get a client manager, but also access to chartered accountants like Michael to give you all the insight that you need to help you run your business. Primarily, we're targeted at contractors, freelancers, consultants, small businesses, that type of thing. So first of all, what are the things that people have to do? What actions do people have to take before the end of the tax year? So we've got maybe a month or so to go.
Yes. Okay. First is to be tax efficient as a company director in a way. So if you are having a personal allowance of the 11,850, it will be wise to have salary of 8,424. That's basically pegged to your national insurance threshold, and then also issue dividends up to 37,926. Now, if you do both, you're looking at paying roughly around 2,400, and depending on your tax code and the rest. So that is basically what you're looking at. You also need to factor in payments on account, which basically is double the income tax you need to pay. So it's payments on account is simply paying next year's tax in advance. So that's the only bit you probably need to work on.
Okay, so if any of the clients out there that have any questions specifically about budgeting for that payment on account, they can contact their client manager or get in touch with us here in the office and we can kind of guide them through that, right?
Yes.
Okay, great. So next thing that we've got is another slide on dividends. Anything else that you want to break
yes,
down here?
This is simply trying to break down how we arrive by that 37,926. Now, the first bit is to do with the 3,426, which is the difference between your our recommended salary and then the personal allowance threshold, which was 11,850. So that is also not taxed at all, so it's basically at 0%. Then there's the dividend allowance itself, which is £2,000, and that's also 0%. And the remainder is what would be taxed at 7.5%, okay, to take it up to the basic rate threshold.
Okay, so everyone out there is going to be taking dividends out of the business, but they're also going to have a salary set up, right? So what do we need to think about doing before the end of the year for that?
Okay, we already know salary is tax efficient because it's tax deductible from your company's point of view anyway, but then it comes with obligations. So on a monthly basis, you have to be filing what we call the RTI, but as it's towards the year end now, you have to file what we call the full payment submission. Now, this has to be done in order to avoid the £100 fine. Now, there are a few options for Crunch clients. We've got those who have got those who want a Crunch payroll service. They don't need to do anything at all. We have those who've got recurring payroll of 702. They would obviously have theirs automatically done. I guess they've got to click on final payroll for the month, and then we've got those who are also below that 702, but then they are still on the recurring amounts. They also have to file a final one, And then I guess that should be it for all of them. Those who not been having a recurring payroll are meant to have, let's say, extra salary if they want to take up to the tax efficient amount, but then they obviously have to contact an accountant to work out what extra salary they need to take, because depending on their circumstance, let's just assume they've got maybe rental income or benefits in kind and the rest. Computation can be done to work out how much extra salary they can take.
Okay, perfect. So moral of that story is if you've got any questions, just get in touch with you or someone in the office. Now, expenses are quite a common question that people want to understand, make sure that they're claiming for everything that they possibly can. So what do we need to think about in expenses?
Yes, towards the tax year end, it's prudent to actually make sure everything is in order anyway. So most of the directors will have this month as their year end. It's best to be logging in your expenses. So let's just mind things like business mileage, they are doing in their personal vehicles and the rest. It's time to actually log all of those things in. Use of home, they could be claiming all of these things. So once these things go, and it basically affects their tax computations as well. So these are the little things they could do to actually make sure everything is in order. They also have to keep records. Records have to be kept for 6 years. You don't have to keep them on paper anymore. You can have them on hard drives or other apps and the rest for storing data.
So another reason to be using an app, I suppose, isn't it? Right, so tax breaks?
Yes, for tax breaks, we've got either ISAs or pensions. It's good to actually make contributions to these tax breaks if you've basically got the funds for it. It's actually about the payment. It's not, it depends on when the payment is actually made. That's when it affects your tax year. So if you make the payment after the 6th of April, it will basically go into the next tax year. So you actually need to make sure this payment is done before the 6th of April.
Okay, perfect. Now, they're the actions which people need to take, and like I've said a few times, if you've got any questions, because we're kind of time restricted by date, get in touch with us and we can kind of guide you through that. But for the next year, from the 6th of April forward, what's kind of changing for the 19-20 year? First of all, there's slight change to the personal allowance, which is increasing, correct?
Yes, it's jumped up from 11,850 to 12,500. So that's, major increase. That it increases your basic threshold as well to 50,000. So we can actually take more dividends. So that is basically a positive
change.
Yes, but these rates are different for the Scottish. Scottish residents.
And we've got a slide specifically about Scottish and Welsh changes at the end of the webinar too. So salary, any change to salary?
Yes, instead of the 8,424, it's now gone up to 8,632. That basically translates to £719 per month. There's a bit of recurring. It's supposed to be £719.33 anyway, but for crunch clients, what we are basically doing is that once it gets to the year end or next 1920 year end, would actually be adjusted to bring it up to date. There's also employment allowance as well, which is 3,000. So if you've got any employees, you're entitled to this if they are earning above the 8,632.
Dividend tax changes. So the tax-free allowance was remaining the same at 2,000?
Yes, it's remaining at 2,000, but on the positive, because the basic rate has increased from 46,000 up to 50,000 now, what you would have paid at a 32.5 rate is basically being saved in this on 1920. That is why we've put down that you'll be saving £912 compared to the current tax year. Anyway. So that again is positive for most company directors. If you're taking the salary of the 8,600 plus the basic rate, you should be fine on that anyway. You're looking at paying around 2,600 in terms of taxes. Again, you need to account for payment on accounts, which is simply paying twice that amount.
Sure. Now, there are a few of our clients that do have company cars. I know there's specifically been a change to the electric or hybrid rates. Is that right?
Yes, it's jumped up from 13% to 16%. Now, when it was introduced initially, it was an incentive to get people to switch from diesel to hybrid.
Yeah.
But then they are now increasing the rate, so it's like the benefit is basically diminishing. But from 2020, the government is introducing what we call it's going to consider the range that a hybrid car can travel, and that will be the new incentive for people to have, let's say, the electric or hybrid cars, you know. But at the moment, the 4% still remains.
Okay. Student loans, people need to, I think, factor that in for the coming tax year, right?
Yes, with student loans as well, that also affects how much tax you pay. So although we've said some people will be paying the 2,400 or 2,600, that doesn't factor in student loan. So if you were on plan 1 or plan 2, that would also increase the amount you need to pay. Now, the government is also changing the thresholds as well. From plan 1 was on 18,330. I think it's actually going up to 18,7 something or so, and then we've also got a plan 2 as well. So all of these would actually increase the amount you pay in terms of income tax.
Postgrad loans?
Postgraduate loan is basically a new loan, or it's been in existence for a while, but this is the first time we would actually be having the repayments being done. So it was introduced a couple of years back, but from April this year, there will be notifications being sent to employers to start deducting postgraduate loan from wages, just like we have for student loan. And it's different from England and Wales are treated differently from Northern Ireland and then Scotland based on the rates they've got.
Okay. So on that note of Scotland, is there anything specific to those that may be joining us from Scotland?
For those in Scotland, I mean, they should be aware of the rates they've got now already. They've got 5 basic rates, or they've got 5 rates compared to UK, or let's say England and Wales. We've got 3 in England and Wales. So that's the main difference. But then they've also increased the thresholds as well. But the good thing is that if you're a company director in Scotland and then you are still taking the recommended salary and dividends, you'll still be paying the same amount of tax as any other director in England.
Yeah, sure. Okay. That makes sense. And Welsh?
Welsh taxes as well. This is also just part of the devolution. The Welsh government is also being given powers to actually claim back taxes. So this is also, at the moment, the Welsh Assembly has decided to peg their rates to England rates. So there is no change from that point of view. But then if you are Welsh residents, you need to actually keep your address and the rest up to date with HMRC and the rest, so they actually know where your taxes should be going.
Okay, that makes sense. And you mentioned this to me a little bit earlier on, explain this to me, this rent-a-room relief. Yes,
rent-a-room relief is if you're a landlord, or let's say a resident landlord, live with your tenant, then you actually get what we call rent-a-room relief. And that has been there for a while, but the government has caught on to the fact that there's abuse of the system. So if you can imagine someone leaving or traveling, leaving their premises to a tenant, especially for periods like, let's say, Wimbledon, and then someone rents out their whole property, the landlord is basically not resident while the tenant is there. So there's a test being introduced where landlords will need to show some level of occupancy whilst the tenant was there to qualify for this relief.
Okay.
If they are absent, then a risk then not having that relief.
Not being able to use the relief. Okay, that makes sense. So I think that pretty much covers the vast majority of the content of the webinar. We've got a whole list of recommended reading and articles which you can all take away and do a bit more research if you are so inclined, or just give us a call in the office and we'd be more than happy to help you out if you want to have a chat. Now, if you do have any questions, we've got Q&A section now. So if you want to get them in, if you want to ask Michael directly, we can do our best to answer those for you now. There are a few questions that have come in, Mike. So here we go. So what is the limit for employer contribution, an employer contribution pension expense? And is this for any employee or just for the director of a limited company?
Is it a rate?
Yeah, well, I assume, is there a limit, or what is the limit that anyone can pay?
It's 3% at the moment. Yes, they are increasing it 3%, and it's at the moment it's 2%, but then they are increasing to 3%. And the employee is the one who pays. Theirs is now going up to 5%, whilst it was actually 3%.
Okay.
Yeah.
Will there be a new tax calculator for our clients to establish their personal allowance into account? Yes, it should already be there.
Sorry.
So yeah, that should be live. If you need kind of guidance to find that, get in touch with your client manager and they can point you in the right direction. One here about what's an employment allowance?
Employment allowance is it's an incentive to employ, or let's say company owners, to employ other people. So it's something that the government introduced. So if you have an employee, you're supposed to pay national insurance contribution as an employer. So the employee suffers normal income tax and then national insurance contribution on their salary, but then the employer as well pays 13.8% for that employee. Now the government does give you an allowance of 3,000, so you don't pay unless you exceed that 3,000 threshold. So if let's just say that what you're supposed to pay in total for the year is 5,000, you'd only pay 2,000 because the 3,000 is taken out of that 5,000 as an employer.
So a bit about expenses. How long do we need to keep receipts for expenses?
6 years.
6 years, and they can be digital as well.
They can be digital, so you actually don't need to keep them hard copies.
Great. What about, is there any changes to VAT? Has anything changed that affects whether it's worth becoming VAT registered or not?
No, there's no change. Since they introduced a limited cost trader, it doesn't really make a difference that much anyway. We usually recommend clients be on the standard scheme because the benefits of being on the flat rate scheme is diminished now.
Yeah, sure. Got one here about age-old question. Any changes in the pipeline for IR35?
IR35, wow, that's a good one. There are changes from April 2020. Now, we already know about the public sector one, but the changes they've introduced for the private sector is that if your end client is basically a medium or large size company, then they would have the responsibility of, first of all, assessing whether your contract falls within IR35.
Right.
If they deem that your contract falls within IR35, then they would also be liable to deduct your, let's say, income tax and contributions and then remit to HMRC. If they obviously fail in their task, the government or HMRC wouldn't go after you, the company director. They would go after the end client.
The end client,
So that is the benefit for most of our clients who are caught on the IR35. Unfortunately, for those who are working for end clients who are considered to be small, that is, in terms of being small, their turnover, the end client's turnover will be 10.2 million. And then balance sheets is basically around 5.1, and then less than 50 employees. Those company directors will still be liable. So it's good to have the distinction between the two. If you're a private company director working through your own company for, let's say, one client who's big, considered to be medium or large, then that end client is the one who's responsible. If you're working for a small sized end client, then you will still be responsible. Now, for those working for the medium and large size as well, the 5% is basically gone now. They wouldn't have any more 5% allowance whilst their deemed calculation is being done. but then the small one working for the small end client will still have that 5%.
Now you mentioned some criteria about deeming whether an end client is small or medium to large. Do they have to fit all of those criteria, or just one of those criteria would make them?
No, you've got to meet at least 2.
Okay, got it. On that IR35 fact as well, I've got a note here that we have an article in the knowledge section about IR35, and we've published loads and loads of content around this particular topic, so feel free to read those. If a director has not created a payroll run for this financial year, is there anything they can do to maximize their tax efficiency?
Yes, it's not too late. I'll just as well say you can do it now and then at least avoid a penalty. But then if you haven't done that as well, there's what we call earlier year submission. So it's rerunning a payroll for the periods that you haven't done it for, and then you can put in, let's say, the 8,424 all in one lump sum in this month. I think it should be fine if you could contact Crunch payroll team. They could get the one done for you. One other thing to be worried about is that with RTI submissions, there's a fine if you don't submit on a monthly basis.
Regularly,
So that is one thing to consider as well. But if you were to submit now, what would then happen is that those earlier year fines will be kind of written off. Yeah, so it's important to get in touch. And
so contact us if you want to get that set up. If you work from home only one day a week, can you still claim the £4 as a business expense?
Yes, you can claim the £4. Remember, it covers, it's not just about the office space you are using. We're also talking about using of your electricity, you've got water, whatever you're using, you're paying in the house. It's all being covered by that. So it's it's okay to still claim it.
On that note of expenses, are travel expenses still claimable if a deemed employee under IR35?
Now, there are different travels under IR35. So under IR35, normal travel would not be allowed. So if you're traveling to a permanent place of work, it wouldn't be allowed. So if you come to Crunch every day, this is your normal travel. If Crunch, however, asked you to go to, let's say, I don't know, Swindon or wherever to go do some work there, that travel you can claim because it's directly related to the contract. A normal travel can't be claimed. But then that normal travel will be covered by the 5% allowance that they have once it comes to what do you call it, the company's point of view. Remember that when we are doing a DM calculation for clients, there's an allowance of 5% given to cover day-to-day business expenses. So the government only, or HMRC only, taxes 95% of it. So the 5% that is left sits in the company to cover normal expenses, so accountancy fees, travel, and all these things that would have been disallowed under the IR35. They are all covered under the 5%. So it's there to cover.
Got it. My accounting year is not aligned with the tax year. How do I calculate my maximum dividend this tax year when I don't have the profit for the tax year?
Wow, that's an interesting one. So accounting year isn't aligned. Now, there are a few things you can do. Dividends are, first of all, available in a company if there are enough profits. So if your company hasn't got profits, then you can forget about issuing a dividend. It will be illegal. Secondly, to work out how much dividends you basically need to issue, although your company year isn't aligned, you still know how much dividend you've issued or maybe have issued in the company to date. So if you know what your salary is going to be for, let's say, the 18-19 tax year, and then you know, let's say you've issued maybe £20,000 of dividend, you can still work out that, okay, with that salary and 20,000 dividends, if I was to issue maybe 2,000 more or 3,000 more, it will take me to where I want to get to in terms of the tax, the basic rate threshold, and that's what it is. but it will be best to probably speak to an accountant.
Yeah, everyone's situation is unique, isn't it? We
Yes.
kind of need some figures in front of us to,
Yes,
to
to
really be
work
able to
it out.
advise, right? Is it okay to claim a monthly travel card if I buy it for convenience to travel around London, but not using it on a daily basis?
There are some strict rules about travel and claiming travel expenses anyway. And HMRC guidance talks about geographic location. So if you're going to the same place of work and the rest, there's a 24-month rule that covers these things. You can't be claiming these expenses. So it's a bit difficult to work out without analyzing the situation for the client. So if that client has been going to the same place or intends to work at the same location for the next, let's say, 24 months, then technically you can't be claiming that travel. But then if it's just a temporary place of work and the rest, then that can be claimed. So without knowing exact details, it will be a bit difficult to work out whether that can be claimed or not.
Got it. One here regarding trivial benefits, other than the value limits clearly stated by HMRC and in a Crunch article on the topic, £300 total, £50 per expense. Are there any limitations on what these expenses can include, e.g. like any product? Or is there any finer detail on that?
No, not that much detail on that one, because it basically says you can use it for gifts and all of stuff. So it will be interesting to find out what they have in mind in terms of what they want to claim to actually give a better answer to that question.
Sure. So get in touch.
Yeah.
If you are working for more than one end client, you can't. If you're working for more than one client, you're not under IR35. Is that right? Is that a right train of thought?
No. Remember, IR35 is about whether you are deemed or considered to be an employee or not in the eyes of what you call it, HMRC. Okay. So if, let's just say, I have one major client I work for, and then the other one is basically I do probably a few hours, 400 hours. HMRC can actually deem that the first major contract, which is where my 90% or 95% of my income comes from, is actually my main employment. And we can also look at the contract to see whether there's a bit of control. We also look at the terms of the contract.
Sure.
So you're looking out for personal service, control, mutuality of obligation. The other factors like the financial risk, being a part and parcel of the organization, whether you're an office holder and the rest. So all of these things will basically determine whether you are within IR35 or not. It is based on a contract. You can have multiple contracts within a year. Some might fall within IR35, others might not fall into IR35. So it makes sense to sometimes have your limited company still open and then have multiple contracts going through.
Sure.
If you're working for the one and the same clients and you know you've been working for them for a very long time, it's more than likely you are within IR35.
Sure.
So it's not about the number of contracts you've got, but it's about what the contract says.
Sure, but how you engage with that client, right? Yes. Okay, got ya. I particularly like this one that I saw. Is there any way I can claim a personal trainer, or about £240 a month?
Personal trainer?
Yeah, like at the gym. Sounds like something I need.
That's an interesting one. Maybe if you probably had a medical condition due to the work you do and then you broke your back and then had to go for physiotherapy and the rest, maybe you could claim that. But then you can't just claim personal trainer. No.
Sure.
It's not related to your work.
Right, I'm going to give you a final one before we close out. I think we're about the half-hour mark now. So if a client is overdue with their payment, which is supposed to be for this financial year, how should that be recorded if they don't pay me until the 1920 tax year?
So the client basically owes them money, then that client will be a trade debtor in our account. The client would have raised an invoice. Having raised an invoice, if the invoice is unpaid, it still sits on there as still outstanding. The sales would have been generated, which would affect the current tax year. The payment will be in the next year. So if you look at your balance sheet, or what we now call statement of financial position, it would have in there trade data, and under that trade data, you should have that amount sitting in there, and that would simply be carried on to the next year. And that's it.
Okay, got you. One last one. How often should I issue dividends? Is there a set structure in terms of what we advise about?
No, there's no limit to how many times you can issue dividends. As long as you've got the funds there, and then also there are profits within the company to issue dividends, you can issue as many as you want.
Great. So if there are any questions thank you for answering those, Michael. If there are any questions that we haven't got to, we will follow up by email. We'll be sending out an email to all of the attendees regardless, with some information, slides, recommended reading and things. But yeah, we will be following up. But if you've got any questions that you want answered specifically, just get in touch with your client manager and they can put you in touch with someone like Michael, who's able to give you the advice. We'll put them all through to you. So thank you very much for joining us today, everyone. One final thing before we head off is Crunch Chorus. So it's our online community where we host all of our information, blog posts. We've got access to webinars, meetups, all sorts of things. So if you want to jump on there and join Crunch Chorus, that would be great. It's crunch.co.uk/chorus, and you can join us next time for our next webinar. Thanks, guys.